So good afternoon everybody and welcome to this weekend's weekly market update. This has been recorded on the afternoon of Saturday the 2nd of August. So we've had a rather interesting week in the US main indices with the indices pushing higher into Wednesday. We then had FOMC and more importantly the press conference, and markets started to turn. We got another big run up with the earnings from Meta and Microsoft, only to see all of that given back and some in the final two sessions of the week. And we have back-to-back follow-through candles to the downside on Thursday and Friday. So the million-dollar question is, have we seen a significant top? And if so, as what? Well, just zoom out, bigger picture. This is the monthly chart of the S&P 500, and we can go back to the top in the late 20s and then the 1932 bottom. So that was a wave one, this was a wave two at super cycle degree of fractal, and therefore all of this move is part of a super cycle degree wave three, and when that move does finish, then we're going to get something much bigger to the downside, and I think that's going to shock people. You know, the question is, how close are we to that top? Well, I would say we're a little way off as yet, but we do need to just pay attention to some of the monthly indicators that are starting to diverge and also flash warning signs. Cycles also, you know, we're getting towards the top of the cycle expectations here, but I do think we have a little more juice. Now, if I just zoom this back out slightly and we look at the last part of this move, and by last part, you know, bear in mind this is a monthly chart. So if we go back, there's the 2000 top, then the A, B, C. That was an 8-year corrective move in a wave four at cycle degree, culminating in the low that we saw in March of 2009. So if that's a wave four at cycle degree, then we need to see a fifth wave at cycle degree that will subdivide into 5 waves at primary degree. And that would then conclude the super cycle degree wave 3. So where are we in that process? Well, off the March 2009 low, we have 5 up to here for a wave 1 and a pullback in a wave 2. Another 5 up here for the wave 3. Complex expanded running flat for the wave 4. And that was the March 2020 low. From there, we are in what is an ending diagonal structure where waves 1, 3 and 5 subdivide into 3 wave moves. So we've had an A, B, C for the wave 1 and an A, B, C back for the wave 2. Another A, B, C up for the wave 3 of that move. That was the high that we saw in February this year. The pullback from it into the low in April, early April this year was the 4, which means we need to see another A, B, C structure up to conclude this 5th wave. If I then come down the timescales, so this is now the weekly chart, and again, let's just zoom this in slightly. There's that March 2020 low and the 1, 2, 3, 4, and this move up out of the April low is the A wave of a wave 5. So we need to final A, B, C structure up to complete the move. Final target for the move would be at 76.70 to 77.42 in the S&P 500. So quite a way to go from where we are. And prior to getting there, we need to see a correction against the most recent rise from the April low. So the question therefore is, was the top that we saw earlier this week the top of the A wave, and therefore we're starting that deeper correction? And I would say that's a reasonable possibility, but it would rely on us counting this move up as a diagonal structure, which, you know, let's come to that. If we come down to the daily time frame, this is the count showing it as a diagonal structure. So we have this thrust out of the low in April. And as often is the case when you get the initial move up from significant pullbacks, the structure is tricky. And I can argue a case for that being an ABC. I could similarly argue a case for that being a 5-wave diagonal in and of itself. And the importance of that is then, what was this that we saw this week? Now, on the basis that that was an ABC and this was a 2 back, Then I've got another A, B, C to here, and this would be the wave 3 of the A wave, and that hit a 123.6 fib. 4 back. Now notice that was shallow and it didn't overlap the 1. Thus, this still allows for the idea that we could be in an impulse structure. A, B, C to the 1764 fib, and then we've started to come off. So if we have completed this move, then we're going to see a move back as a large A, B, C structure down, I think, to as low as 51.50, but certainly down towards 53.74. And we're expecting that low to come in around October this year. I'm just going to flip to our other tools here. You can see that the strongest technicals, the momentum signature, which we take from our squeeze indicator, was here. And that this move here has been on divergence. The momentum has been much weaker. Now, that's equally applicable to a diagonal structure, with this being the 3, or this being a 3 of 3 in an impulse structure. So that doesn't really help us. What we have got, and we got it on Friday morning, was the daily CRSI sell signal. Now, these signals are not to be ignored. They are absolute dynamite. It got you long coming out of this low. It got you short here just before this final top, so within points of the top, and gave you this move here. And you go back and you've seen me do it a million times, where I take the price action off the chart, identify all the buy and sell signals just from this dynamic CRSI indicator, and they are frighteningly accurate. So for now, we should expect further downside. It's simply a question of as what. Now, if I add the cycles in, the cycles are saying here, look, this is the composite cycle, and it's a combination of the net effect on price of these cycles here, and they are derived from our cycles engine. This updates on every single new bar of information. So every daily close, the daily chart, all of the cycles get rescanned, everything gets recalculated. And as you know, the Wave Cycle Trader tools are also dynamic in that they link to the cycles engine in order that they don't lag. Nearly all indicators that you have on most charts, you don't see on mine. You don't see MACDs, you don't see standard RSIs and stochastics and all the rubbish and nonsense that you read about in the books. They're worthless. So we use our own set of tools, and they are tuned to the cycles engine, and the bands that we use for our signals are also dynamic rather than static, and that is why they are so accurate. So that's saying, look, we should be looking down for a little bit longer, but then we've got another move up. Now, just as a note, just because this looks like it's going to be a higher high, it doesn't mean that that's not how to read cycles. What it's saying is that the pressure on price will be to the upside into this peak time-wise. So it could be that we come quite considerably deeper, and this move up is corrective before we get the final washout move that we always see at the end of large corrections into our October window. Or it could be that we have a shallower retrace here and we push up to one last new all-time high, and this A wave's not yet in. Then we get the A, B, C structure into our October low, one or the other. So how do we distinguish between those two? Well, as you know, all of these analyses are shared in real time within the TradingVision software application, as are they shared in the Wave Cycle Trader Live Room Hub. So all the charts are driven by live data. This is the Wave Cycle Trader primary analysis. If you just go to the straightforward primary analysis, there's another flavor of this count, but the one I want to focus on is this one, Wave Cycle Trader Alt 1. Same count in that you've got the 1, 2 coming off the April low, but this time I'm allowing for this being an impulse structure, in which case we then have a 1, 2, 3, 4, 5 into a 1764 bottom up fib extension. That's pretty textbook in terms of expectation of levels to reach for a wave 3 in an impulse. What we then expect in the wave 4 is that it will hold. It won't go lower than the 1.0 bottom up fib, and typically it would hold around the 123.6, possibly even the 138.2. So if we get an A, B, C into this support region and we do not trade below 58.31 SPX before we turn back up and we see our indicators reset and give us the buy signal, that would strongly suggest that we are going to get a fifth wave up, as I'm showing here. And the minimum expectation for that would be the 2.0 extension at 60.64. And there's a possibility that we push to the 238.2 at just north of 7,000. Then we would get the bigger retrace that we're looking for into our October timeframe. Now when I add the cycles, they start to tie up. If you look back, this composite that I've been following has been pretty bloody accurate. So it's tracking extremely well. We don't trade off cycles, remember. Cycles are indicative and part of our analysis. They then indicate a setup that is materializing. We use the real-time tools in order to actually take positions and trigger our trade entries and exits. Now, if this is the case, I'm just going to switch to the ES, okay? And I'm going to go to the same count. So you'll see on Monday when you open the charts that I've mirrored these counts in the ES and the NQ, as well as when we trade the futures, we've got them. If I just take you down to an hourly time frame and we look at the high that we saw earlier this week, and we take the count down, I've got 5 to here for a 1, 2, then a 1, 2, 3, into a 138.2 fib on Friday afternoon before we started to get this little consolidation. If this is going to give us a full impulse structure to the downside, which would really help us here, then we should get another 2 lows down towards 61.31.5 ES. That's the futures figure. If that's the case, you've got a 5-wave impulse structure. And what we know about those is they cannot stand in the middle of a move. They either are at the end of a move or the beginning of a move. Therefore, what we know about this is if we get that, it is very, very likely, highly probable, that it is only part of a larger move down and that the next move up will be corrective against it. Irrespective of which count we're in, I would expect to see this. I would expect to see that lower low on Monday. Then I would expect to see a retrace. Then I would expect to see another fractal to the downside. But it's then a case of what happens. When we've got this in place, we will take the length of this and project down with our Fibonacci tools and look for equality to the 138.2 fib and confluence with these bottom up fibs. If we take this zone out, then what we've actually got is a 1, 2, and we're going to go 3, 4, 5. If we see that, then that confirms for us that we are already in the larger degree retrace and we are seeing the first leg down of a much bigger ABC structure that is not expected to bottom out until around the middle of October this year. So that keeps life simple. We need to see the completion of a 5-wave move. If we do that, we know that the next move up will be corrective. We can use our smaller time frames like the hourly chart to look to get on board for this leg down, and then we see where that takes us. But I would argue very much that it is more likely than not that what we're seeing is a wave 4 and we're going to see a 5th wave up afterwards. And then we will get into the larger degree correction in the S&P 500. Now, if I come over and look at all of that in the NASDAQ, same thing here. This is the diagonal count where you've got the 1, 2, 3, 4, A, B, C, and we've seen all of the A wave in the NASDAQ. And then we're going to immediately start the B wave back down. However, cycles, they're saying a little bit more downside, then a move up before we get the flush into the 24th of October, if you want me to be precise. That will adjust dynamically, as you know, as we move along, and then we will wait when we get there for our signals. What we will also be doing is updating our short-term focus list and looking, you know, a lot of these, if you go back and look at the update I put out the other week, we sold into strength for considerable profits off their last buy signals, and we'll be looking for some of those and adding some others into the mix to trade that next leg up. So now's the time to be patient and be cautious. I wouldn't play in the stocks very much for that last move up if we're going to get it. Again, if we look at the alternative analysis, here it is in the Nasdaq, which suggests the A, B, C structure for the 4. The key levels we must hold is 20,744. I would expect it to hold somewhere between 21,568 and 22,095. If this is a 4, then we should get that 5th wave up to complete the A wave. There's your target zone on the charts for the A wave between 24,468 and 26,061. Then there's your B wave into the projected cycle bottom, and you can see again the cycle bottom with the Nasdaq 24th of October. It's synced beautifully with our expectations in the S&P 500 as well. So that's what we've got in the main 2 US indices here going into next week. What I would expect to see is lower lows on Monday and into possibly Tuesday, and ideally 2 of them before we get a corrective move to the upside that retraces part of the drop, and that may well come very, very high. I would expect it to, especially if we are still seeing a wave 4 at smaller degree. Now, the other thing I want to just look at here is SMH, which is the semiconductor ETF. And again, same thing here. You know, we got the sell signal here in SMH warning us that we should be looking to the downside. We had our Mansfield indicator also giving us a sell signal coming right off the highs this week, and our trender was diverged and curling over. You can see we've got a consensus of 4 to the downside, and you can see the wave cycle trader tools all firing short here in SMH. And you know, this the Mag 7 and software and AI companies are what have been leading and holding this market up in this run up out of April. So therefore I would expect this to have a similar trajectory to the main indices, certainly the Nasdaq. Now this looks to me like it needs a 4, and then we're going to get a 5th up before we see its B wave come back down, and therefore that's also part of my thinking here in the SMH, is that we're going to see a 4-5. If we look at one of the biggest components, which is the excuse me, the NVDA came up to a 2.0 extension of its April low. Again, I would expect a 4, and that could come in shallow at around 160. I wouldn't expect to see it below around the 148 level, but then we need a 5th wave up in NVIDIA before we start to see something much, much bigger to the downside unfold there also.